You've seen it online, right? I mean, we all have. The laptops on the beach, the crazy charts with green lines shooting up. This promise of a life of total freedom, all thanks to Forex trading.
And let's be honest, it's a powerful dream, isn't it? The idea that you, with just a little bit of know-how and a few clicks, can tap into the biggest financial market in the world and, find this super fast path to wealth.
But here's the number they never show you in those flashy ads. 95%. Yeah, the data is pretty clear that about 95% of new retail traders lose their money and just quit. It's a really harsh dose of reality.
So let's get right into it, because this explainer isn't about killing that dream. It's about making it actually possible. And the very first thing you have to do, the most important step, is to change your goal completely. Your job isn't to get rich quick. Nope. Your first job is just to survive. So think of this as your survival guide.
Okay, our journey starts with Pillar 1. You have to learn the map. And the biggest mental shift you have to make right now is to stop thinking of trading as a lottery ticket and start treating it like a serious business, a business you're building from scratch.
And every single business on the planet has its own language, its own jargon. You just can't expect to succeed if you don't speak it. So learning the basics, that's not optional. It's the absolute bare minimum just to get in the door. First up on our vocabulary list is the pip. It stands for percentage in point, but honestly, just think of it as the cents to the dollar in the currency world. It's the tiny little unit we use to measure our profits and our losses.
Next is the spread. This is simply the cost of doing business. It's the tiny difference between the buy price and the sell price that goes to your broker as their fee. It's why every trade you ever take starts out just a tiny bit in the red.
And now for the big one, leverage. Oh man, this is a serious double-edged sword. It's basically borrowed money from your broker that lets you control a huge position with just a little bit of your own cash. It can make your wins feel amazing, but, and this is a big but, it will magnify your losses just as fast, if not faster. Now you might look at a chart and think it's just random squiggly lines, but it's not. These prices are moved by massive, real-world forces. The absolute number one driver is interest rates set by central banks. But you also have big economic reports about GDP or inflation and, of course, major geopolitical events. It all matters. With all of this going on, it is so easy to fall into what we call strategy hopping. It's a huge trap. So here's the rule. Pick one. Just one. A simple, clear strategy. And you have to promise yourself you'll stick with it, test it, and really learn it for at least 100 trades before you even think about looking at something new. And where are you going to practice these 100 trades? In a demo account, with fake money. This is your flight simulator. You would never let a pilot fly a real plane full of people without tons of hours in a simulator, right? Same thing here. You have to prove for at least 3 to 6 months that you can be profitable with fake money. Because if you can't make money when it's fake, there's absolutely no way you're going to make it when real money and real emotions are on the line. Okay, this takes us to Pillar 2, the survival rules. And this is so important because this is the only part of trading where you have absolute 100% control. You can't control the market, but you can always control how much you're willing to lose. And that, right there, is what separates the amateurs from the pros. It all comes down to this one simple number, 1%. If you take nothing else away from this, please remember this rule. Never, ever risk more than 1 to 2% of your entire account on any single trade. Let's make that super clear. Say you have a $10,000 account. This rule means your maximum allowed loss for any trade is $100. That's it. End of story. This discipline is what ensures that a bad losing streak, and trust me, they will happen, can't knock you out of the game. And check this out. This is the beautiful math behind why that rule works so well. It's all about your risk to reward ratio. See, if you risk $100 to make $100, you have to be right more than half the time just to break even. But look what happens when you only take trades where you stand to make at least twice what you're risking. All of a sudden, you only need to win about 34% of the time to be profitable. You can literally be wrong twice as often as you're right and still make money. How cool is that? So how do you enforce this? With a tool called the stop loss. It is your non-negotiable insurance policy on every single trade. It's an order that automatically closes your trade at your maximum risk level. And you have to set it based on pure logic, the point where your idea is proven wrong, not on some vague hope that things will turn around. All right, this leads us to the third pillar. And honestly, this is the hardest one. This is the final boss battle, mastering your mind. You can have the best strategy in the world and perfect risk management, but it means nothing if you don't have the psychological discipline to actually follow your own rules. The market is like a machine that's perfectly designed to mess with your head, to attack your fear and your greed.
And this right here, this is the civil war that happens inside every trader's brain. On one side, you have your ego. It's the voice that screams at you to jump right back in after a loss to get your money back. We call that revenge trading. On the other side is your plan. That's the calm voice telling you to execute your rules like a robot, stick to your stop loss, and just walk away when you're supposed to. Your entire career depends on which side wins that fight.
You know, a huge part of winning that mental game is just changing your relationship with losing. A loss is not a failure. It's not a reflection of who you are. A loss is just a normal, everyday cost of doing business. It's like the rent a store has to pay. It's just part of the game.
And the #1 tool for working on your mindset? A trading journal. But I'm not just talking about writing down the numbers. You have to write down how you felt. Were you scared when you took the trade? Were you feeling greedy, overconfident? Looking back at this every week is like a pro athlete watching game film. It shows you the mental mistakes you keep making over and over again so you can finally fix them.
So, we have our 3 pillars: education, risk management, and psychology. Now, let's put it all together into an actual blueprint, something that's going to take you from being a hopeful gambler to being a disciplined business owner.
And that blueprint is your written trading plan. I mean it. Physically write it down. It doesn't have to be some 50-page document. It just needs to answer 4 simple questions. 1. What are you going to trade? Pick 1 or 2 things and stick to them. 2. When are you going to trade? Define your hours. 3. Why are you going to enter a trade? List your exact criteria. And 4. Where will your stop loss and take profit go before you even click the button?
And really, that's what it all comes down to. Having that written plan, it's the dividing line. It's the difference between having a process and just hoping for the best. So the final question you have to ask yourself is this: are you here to build a business, or are you just buying a lottery ticket? Your survival really does depend on that answer.